Good morning, everybody. Welcome to the morning show here on Stock Market TV. Spencer Israel, JC Parets. No Steve today. He'll be back tomorrow. What's on everyone's radar today? Is there any earnings that we're looking at? Maybe Nvidia after the close, potentially. Maybe we'll talk about that. Target this morning. Oh my lord, Target. They're gonna take all of retail with it this morning to the downside. Not good. We'll talk about that. We'll talk futures with our guest, Bill Baruch from Blue Line Futures. He'll be on at 9. I don't know if we'll have Kenny on with us. I left Kenny. I saw him last night. I was with him. I was hanging out. I left him in Manhattan. I don't know if he's still there or if he's not. I don't really. We'll find out. How about that? And it's Wednesday, so I'll have Mary on as well. And that's the plan. What up, chat? Yes, Target is getting smoked out there. We all need to support our brands more. And I don't care about Target actually, but our wives do. My wife loves Target. So we got to go to Target more, support the brands that we love. And yeah, I guess this wouldn't happen if we did that more. Okay, smash the like. Here we go. Let's start the show.
Oh, Mr. Spencer Israel, we are back.
You're back.
I am back. Yes, we never left. But I was busy doing city things, you know.
Yeah.
Throw up that slide too. Let's show the folks how much fun we were having, huh? What do you say?
What's that slide too? I don't even know.
Throw it up.
I don't even have my slides open. Let me see. What's this? Oh yeah.
Hey.
Yeah. That's right.
The Three Stooges.
That's right.
No, that was a lot of fun last night. I got to tell you, so there's a few thoughts. Number one, people are doing business. People are not messing around. There are, it's interesting walking around the conference yesterday. It was a Benzinga conference and, FinTech Awards and everything like that. More interested in kind of the people there and some of the deals that are being made. And, it's really interesting. There are companies that are essentially trying to be non-for-profits. Like they have no interest in monetizing anything that they're doing. And it's fascinating to watch. And then there are others that, are trying to do deals and trying to do business and collabos. And, it's really fascinating watching the difference between the two. Also, New York is, full throttle. Any questions about whether New York is back, post-COVID and, New York is never going to be the same again. All of that is complete nonsense.
Shenanigans. Although, if you come back in like a week or two, JC, it's even better because New York in the holiday season is like the best time of year to go. It's my opinion.
What?
New York during the holidays?
No. The holiday is the worst time to be in New York. Are you crazy?
No, it's the best time. It's magical.
Get out of here. Are you crazy? No.
No, I'm not crazy. I'm not crazy.
No, you do not. New York is the worst place on earth starting just before Thanksgiving and just gets progressively worse every day that passes until New Year's Eve, which is the worst day to be in New York of the entire year. And then after New Year's, then New York gets better. New York during the holidays is like worse than UN General Assembly or Fashion Week or any of these other disastrous times to be in the city.
No, man.
No, Spencer, there's
a feeling in the air.
That is such bullshit. That's just smelly people that haven't showered. That's what you're smelling. It's not a feeling. That's just grime.
All right. Well, as someone who does not live in New York, for me, it's fun to go.
No.
All right.
Well. Horrible. Number one. Number two, it's funny that your wife likes Target. My wife hates Target.
All right.
She says that like it's all like janky stuff.
This is all her fault then. This is all her fault.
We should have my wife and your wife debate Target with Jeff Mackey.
Oh, dude, that would be
right. So your wife will be the Target bull. My wife will be the Target bear. And Mackey is like the judge, right? Like the referee.
Yeah. Would
that be fun? My wife would probably hate that.
It's a lifestyle thing. I don't know. I don't get it, but People dig. I mean, people are not digging Target apparently because it's down 17% this morning on their report, and not great, Bob. So yeah, everyone's saying maybe okay, fine. I'm a tourist. Sue me. All right, whatever. Okay, I like New York in the holiday season. Whatever.
It
Okay,
is New York City around the holidays could not be a worse place.
fine. You all have your opinion. I have mine.
It's
Let's do
not my
state of the
opinion.
market.
It's facts only, Spencer.
Let's do
Facts
state of
only.
the
Why don't you
markets.
go for General Assembly in September? Why don't you go there and
No,
hang
that
out there
sucks.
and,
No,
and,
no.
and try to take
I've been in the city for
taxi
that. It's
across
horrible.
town?
Yeah, no, that sucks.
New York during the holidays is worse than General Assembly.
Okay.
Shall we?
Yeah.
All right, ladies and gentlemen, we've got the Dow futures. How are we doing on audio and video now that we're back in the old office? It looks like our settings are straight. All right, we got the Dow futures up 115 points, 43,515. Is that right? Yeah, 43,515. S&P 500 futures up 10 handles, 5950. You got the Nasdaq 100 futures up 20 bips. That's 20,800 and change. 30-year bond futures getting hit. Down close to 0.2%, down to 116. Crude oil up 0.2%, hanging out. This crude oil loves 69. Copper up 0.5%, 415. Gold up close to 0.5%, 2640. Silver flat this morning at 31.25, with the volatility index down to 16. Now, this is where things get exciting, Mr. Spencer Israel. Bitcoin, new all-time highs, 94,250, well on its way to 100,000. Ethereum flat on the day at 3,100. Solana just under 240, flat on the day. Binance 614. Total crypto market cap, Mr. Spencer Israel, 3.07 trillion dollars for crypto, highest total market cap in the history of cryptocurrencies. How do you feel about that?
3 trillion. That's how I feel about that. No, I feel great. Dude, what the performance of Bitcoin in the past what I guess like week has been quite interesting, right? Because you had this sort of you had some profit taking in stocks, right? And even in other cryptos too, but not Bitcoin. Bitcoin's been really strong. It's been very, very fun to watch.
Bitcoin, Solana as well. I was talking with Joe McCann yesterday, who was, big Solana bull at $8. He did very well for himself. He was walking around a few years ago trying to raise money for a fund, and to try to buy, Solana and other things. And now they have too much money, and people are trying to give them money, and they can't accept it. I mean, talk about coming full circle. So good for him. Shout out Joe McCann. Follow him on Twitter. Great follow. He gets the space. Fantastic.
Yeah,
On the meme
Bitcoin's
coin
been
front, I want to talk about the meme coin front. Being in New
all
York
right.
City for a couple of days, this conversation came up on multiple occasions. For the most part, people think it's crazy. I have great news. Talking to Nicky Montana, had some cocktails with him on Monday, and they are ready to go. There's going to be an iOS app dropping shortly. I got some insight on the cap table at spot.dog. There's some heavy hitters on that cap table. So this isn't going anywhere, guys. And shout out Nikki, who is making life easier for people who want to trade cryptocurrencies. And very specifically, a lot of these meme coins that you have to go to various exchanges, and it's a little bit complicated. And I was talking to Raul Paul last night about it too. He's like, it's such a pain in the neck. I always get so scared when I'm moving money around. These are people like myself who do this every single day, and we still get a little bit of anxiety when we're sending
Yes,
money on chain.
for sure. You have to like think before you press.
Yeah.
Like,
Yep. And
yeah,
so shout out Nikki, making life so much easier. Now all of that is done for you. So you can literally just log on and buy whatever you want. It doesn't matter what exchange it's on, or what chain it's on. Ethereum chain, Solana, the Radium, Coinbase. It doesn't matter.
good,
Just go in there and you buy it.
good. This is what we've been missing.
Yeah.
We. I say we, but yes. Actually, yeah, me. People like me.
Listen, all of us, myself included, and
Yeah.
I've been entrenched in this I was orange pilled over a decade ago, 11 years ago, whatever it is now. And I can tell you for a fact that even someone like myself who can walk you through how to transact on any exchange, like it's not that hard. Even for someone like me, I can't wait for this because it's so much simpler. I could just
Yeah.
go onto my phone, boop, boop, and we're done. I don't have to move money and the wrapped ETH and then the radium, and then I got to move the Solana and then back to this. No more.
Yeah. And God forbid you've staked anything, you gotta wait days to unstake it. It's like,
Oh,
oh,
and then if you press the wrong button and you screw it up and you send money into like even to this day, I send a little bit, make sure it goes through, and then I'll send the rest. Like no more of that nonsense. So
yeah.
shout out Nicky Montana. So I got a little insight. We'll get more information shortly. We'll have him on the show. He'll explain everything. We're going to make it really easy. You're going to be able to go to our site and you're going to be able to just press a button and buy it. Like that's how easy life is going to be.
All right.
You are, following along on all the crypto stuff that we're doing. You can just press a button and buy it now, which is going to be fantastic. I spoke to our developers about it yesterday, so it's happening.
I'm looking forward to this.
I am too.
Yep.
Um,
Um,
so, Mr. Spencer Israel,
yep.
I was monitoring the markets over the last couple of days, of course. But what did I miss? You think
What did you miss?
out from this week?
That's a good question. I I don't know. What did to me, like, the biggest thing is just sort of watching the retracement from the last week, right? Or, like, we had a huge gap up after the election, and then a few days thereafter, we kind of gave a little bit back, and it's okay. It's totally fine, but just kind of watching that price action sort of digest itself. That's sort of the big thing for me. That's what I've been watching, sort of at the index level at least, right? Um, so that's sort of the big story for me right now. I don't
I
know
was
if,
tweeting. I was tweeting this out. This is what I was thinking about over the last couple of days.
yeah,
Throw up the tech relative.
like, I mean, we're
Well,
still higher than we were pre-election, so, like, we're still higher than those prior highs from what, like, middle of October? Yeah. So
so this is technology, large cap technology underperforming for most of the year, just generating negative alpha for those who are interested in that sort of thing. And then, of course, small cap technology closing last week, new 3-year lows on a relative basis. So technology has been a complete disaster for anybody trying to generate alpha. So I was thinking to myself on Monday, I was walking to go have lunch, sushi, and I'm walking through the city, listening to my music, minding my own business, and I couldn't help but think about just how well the stock market has done despite all of the consistent underperformance from technology stocks. Even like in Q3, technology was down in the third quarter. Large cap technology, small cap technology too. But the fact that large cap technology was down in the third quarter when all of the indexes were up double digits. I mean, just everything was up in the third quarter, industrials, financials. I mean, everything was up. Technology was actually down. And then since then, again, continuing to underperform. So think about how well the stock market has done despite the underperformance in technology. Spencer, how do
I
you
mean,
think the stock
I don't
market
know.
would
It's like
do if
not
tech becomes a leader again?
look, technology is still the one, two, three. It's the fourth or fifth, maybe fifth best sector of the year. Actually, might be fifth. All right, so it's middle of the pack. Middle of the pack. It's the fifth best sector of the year.
Right. That underperformance really got going in Q2, was that peak.
Right.
So I'll ask you again. How do you think the stock market will do if technology actually becomes a leader again? Which, by the way, when you study every bull market in
Yeah.
history, technology tends to be a leader almost every single time.
Yeah, technology, particularly the heavy hitters. If they really start to go, then, like, we're all going with it, right? It's like it's going to be an index party across the board. Everyone's going to be partying if the mega caps start to really go and technology starts to go with it. So technology is up 20% year to date, right?
Technology up 20% year to
That
date.
is
So
underperforming communications, then financials, then utilities, then industrials, then technology, right? Um, so, but it's not.
so it's technology this year has created 300 basis points of negative alpha. And then if you
I
just
mean,
look shorter term, look at the
that's
last
how you want to
3
look at
months
it.
return. Now you're looking at another 300 basis points of negative alpha just in the last 3
What
months. So
what
just
what I would want to know, what I would be curious to see is how many years in the last, I guess since the financial crisis, for how many times has technology underperformed the S&P for the calendar year? I know it's arbitrary, but that we're on pace for that to happen so far. Right now, we're 5 weeks from the end of the
well,
year here.
historically, and we'll go back if you want to have Grant run it in today's team meeting. You could bring it up if you'd like. I'd be interested in that myself. But the short answer is in bull markets, almost never,
Right,
and in bear markets, almost always. So, I mean, that's
right,
the short
sure,
answer.
sure. I'm sure it happened in
But never,
2020.
never are bull markets and bear markets do they begin and or end at calendar years, right?
I
Somewhere in the middle. So
I'm sure it
it's not
happened in
exactly right, but
2022. But really, since the financial crisis, I'm sure it hasn't happened all that often. And if things stay the way they are, then technology will have underperformed the S&P for the year, which is not by a lot. So it's somewhat like it's kind of like splitting hairs here a little bit, right? But it did, or it has, right? So I'd be curious to see that just because it's sort of a rarity. I mean, shout out to financials, totally crushing it.
yeah,
Communication services crushing it.
yep.
Um, and things can change fast. If we were having this conversation 2 weeks ago, healthcare looked a lot different, right? And now it's the worst performing sector of the year. So things can change in a hurry.
Yeah, Eli Lilly continues to get crushed. Novo Nordisk continues to get crushed.
I mean, at the rate we're going, healthcare is in danger of going red for the year. Like this week, that could happen, right?
Quite the day, up almost 5% for Nvidia yesterday. That was very, very impressive, I must say.
Yeah.
That was some stick they put in there. Also, I don't want to speak incorrectly here, so I'm just double checking before I make this statement. But um, energy closed the week at new 6-month highs. The energy sector, if you want to throw that up, throw up slide 4 there. So here we're looking at the energy sector index with crude oil overlaid. As you can see that they tend to move pretty in sync. So new 6-month highs in the energy sector index, despite the struggles in crude oil, to me definitely stand out. Like, is there something that crude oil knows that's not being priced into the stock market, or is it one of these things where we should
No,
be
what?
impressed with the behavior of the stock market despite the weakness in crude
Why
oil?
would you assume that and not the other way around?
Oh, I'm not assuming anything. I'm just asking the
Oh,
question, right? I'm
oh,
asking the question, posing the question. So you're
yeah.
saying we should be impressed with the performance in energy stocks?
Yeah, I mean,
Yeah.
well, I don't know either, but I'm just saying it's just as likely that that the stock market knows something that crude doesn't, right? Then
Go to the next one. Zoom in a little bit. There you go. So you can see the energy sector index. So those are the stocks. The candlesticks are the stocks. The black line is the commodity itself, crude oil. So again, the resiliency in the equities, despite the weakness in the commodity. I mean, that's impressive to me. I'm with you, Spencer.
but this isn't a commodity story because the same pattern does not apply to other commodities, right? This is a uniquely oil phenomenon right now. If you look at the gold
Is
miners,
it?
for example,
I mean, copper. What about copper?
I have not looked at any copper stocks for a minute, so I
Uh,
don't know.
the copper stocks are not as bad as the commodity itself, but not as good as energy stocks. But
Okay,
yeah, I mean the
fine.
struggles have been in commodities in general. At least for now, haven't seen that rotation back into commodities. Gold, I don't. Yes, it's a commodity, but it's kind of like its own thing. Like it's almost like a currency, more so than it is a
Mm,
commodity. So I try not to think about gold. I try to think about copper. I try to think about energy. And remember, energy is like 40% of the CRB index or something crazy.
I was thinking about this on the train last night. Like, is gold really a currency, or
Hmm. It
like?
behaves more like a currency than it does a commodity.
Mm, Yeah, but like in practicalities, like practically speaking, it's not a currency. Like maybe in the market it is, but
It's not practicality, like your wife's not going to Target and using her gold,
right,
but in
right.
terms of like things that actually matter and how asset prices actually trade, it trades
I
like a
don't,
currency. Like
I,
you saw it last year, right? You saw last year
don't know.
all of these currencies around the world were already making new all-time lows relative to gold. So you know how we look at the euro versus the dollar, the euro versus the yen, the euro
Yeah.
versus British pound, right? So we look at other currencies versus all, versus all the other currencies, and gold is one of them. So all of the currencies in the world were making new all-time lows relative to gold last year. Their two remaining holdouts were the Swiss franc and the US dollar. And what happened this year? The Swiss franc and the US dollar both also broke to new all time lows relative to gold. So when you're looking at all these other currencies around the world, they were already suggesting that eventually Swissy and USD were going to do the exact same thing. And that is precisely what happened, right? Now, the other side of the coin, to your point, Spencer, like gold seems more like a commodity than a currency. Well, when you study history and you go back and you zoom out, gold and copper tend to move together. Gold tends to be a leader in commodity super cycles. So if those are in fact true, then we should see the rest of commodities catching up to gold, right? So I'm not saying that I know everything or I know what's going to happen. I'm just laying out the facts. And then, as traders and investors out there in, trader land, you decide for yourself how you want to treat this particular asset class. I'm on I don't give a shit
Yeah.
guy. Like
Yeah.
I don't care whether it's a commodity or a currency. Like it doesn't matter. But I do like to think about these things in both of those ways. And pose the question to intelligent people that can add some value to the conversation. I know that we got a ton of a ton of people in this chat, very smart. You guys want to weigh in on how you guys are thinking about this. It's a fascinating conversation. And by the way, Bitcoin is another one. When I was first orange pilled a decade ago and I first started adding Bitcoin to my charts, I just added it to my currency chart book. So I would have like the dollar, the euro, the yen, Mexican peso, Bitcoin. Like it was just one more currency in my head.
Yeah.
Clearly, the market that changed over the years as more cryptocurrencies came on board. We started treating cryptocurrencies just like more tech stocks and kind of came to the realization that it wasn't a currency at all. Right. So, like, it's not like
Well,
I'm stubborn and
yeah.
hard-headed. Like I'm happy to evolve and change my mind. I do all the time.
The irony of the word cryptocurrency is like it's only used as a currency to buy other cryptos,
Right.
right? So no one like we never got the adoption.
Now with spot.dog, now you could just use your debit card.
Right, but like crypto as a currency is only used to buy other cryptos. We never People don't use it in their lives, which is totally okay. It doesn't matter that that never happened because clearly the market says it doesn't matter. So, but all the people saying in 2016 this is going to be the future. We're going to be it's a true currency of the future. It's going to invade our lives. The blockchain's going to use everything. It hasn't happened yet. Doesn't matter. Doesn't matter at all. The
I
market,
got one more for you.
yeah.
Throw up the slide 6 there.
Also, I don't want to open a can of worms here, but like no one's ever explained to me how something can be a currency at the same time as an asset. It can't really be both of those things simultaneously.
Yeah, the answer is that they're not currencies.
Right.
Cryptocurrency is fake news. They are tokens. They are coins.
Yeah.
They're transactions on a blockchain. But currency is probably fake news. This is the
Right.
Bitcoin dominance, making new multi-year highs, literally as we speak. And by the way, the government regulators also don't really have any idea what these things are. They can't figure out whether the CFTC needs to be in charge because they're commodities, or whether it's the SEC because they're stocks. They're launching 3,000 tokens a day. So it's impossible for the government to regulate all of those things. Right? Like they're creating AI systems that are specifically designed to create tokens and just making it impossible for the government to regulate them all. Because who's the government going to go after? These bots that are automated? Like, what person are you going to go after? There's nobody there, right? So there's a lot of questions as far as and I think that a lot of these are going to start to be answered. As it's funny because it's like regulation by deregulation, right? Like they're deregulating by making rules, right?
Yeah.
Fascinating.
It's bullish regulation. Regulation is not a bad thing, right? Yeah. So it's bullish regulation. Dawson
And
asked a good question. Wait, Dawson asked a question about what on earth makes Bitcoin dominance actually flinch down.
Ethereum
Ha-
outperforming.
okay, I was gonna say, how's this for a thought? The more Bitcoin goes up, the greater the likelihood that it's gonna those animal spirits will spread down the crypto cap scale, right?
No.
Which would end up leading towards Bitcoin underperformance. No,
It's literally one thing. It's just
Ethereum.
Ethereum.
All right.
It's just Ethereum because Ethereum is the second largest cryptocurrency and it's 3 times larger than Solana. So Ethereum's dramatic underperformance is essentially Bitcoin dominance. So what is going to turn around Bitcoin dominance if and when Ethereum starts to outperform, or Solana gets to the size of Ethereum and starts to eat into that, which we're still, I mean, Solana has to
Okay,
triple
so then it's
just
about
to get to
Solana.
Ethereum.
Okay. How far away is Solana right now? Let me look.
It's 1/3. So it's about 130, 140,
Yeah.
and Ethereum's pushing 400.
Yeah. Oh, I didn't realize that Tether's in between. Anyway, okay. Our guest probably has thoughts, not so much on the crypto stuff, but on gold,
Futures, commodities, I
on
love it.
yeah, as a currency, as a store of value.
It's a good
Um,
segue, Spencer.
Thank you, appreciate that. So we got Bill Baruch here from Blue Line Futures. I think he's here, right? Yeah, he's here. All right, let's bring him on and talk about it.
Bring them out.
What's going on?
Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Bill,
what's up, my man? How are you?
How are you? Thanks for having me on.
For sure. You came on at a great time. We're sitting here debating currencies and futures and commodities, and now we have an adult in the room that can actually shed some light instead of us two knuckleheads arguing about this sort of thing. So let's just start it out right there. So can you do me a favor? Just introduce yourself to the folks. Let them know why we're so interested in your thoughts on futures.
Yeah. My name is Bill Baruch. As you see here, my background is in futures. I mean, that's where I cut my teeth here at the Board of Trade. I've been here since 2006. Our office is still here. There's no floor, but I have a brokerage. It focuses with agriculture space as well as retail and family offices that want access to futures. I also manage a commodity fund as well as a investment advisor that focuses in securities too. So we cover all bases here. Commodity fund has a big focus on metals as well. So I'll leave it at that.
Well, let's start there. I've been thinking about this and arguing about this with other smart people for at least 15 years, maybe longer. How do you think about gold? Do you think about it as a currency? Do you think about it as a commodity? Do you think about it as a commodity because you're a commodities trader? Like, like how do you think, where does gold fit in this world, do you think?
Yeah, I don't want to narrow it into one box, but I have been on record saying I do view gold as a currency. It's priced in dollars.
Boom.
Wait.
Spencer's like, are you serious?
Wait. It's priced in dollars.
Well, it's priced in dollars.
It can be priced in dollars.
It moves relative. So the way I view it in the metals fund that we have, I mean, it's all metals I have access to, but I also have access to the euro and the yen. And I hedge currency risk. I mean, in the dollar strong environment, you're going to see it be a headwind. The gold's typically going to be weaker. But there's also other aspects to where the pair can really trade. I mean, this year we've used the yen long as a position to sort of hedge, unwind in leverage space that could be taking a headwind to gold. So there's a number of ways to look at it, but I wouldn't back into the corner of only a currency. It certainly is a commodity. I mean, it certainly has the aspects of inflation, the Chinese yuan, what that's going to impact, what's going on in China, exporting deflation. There's a number of ways to look at it, but it has the aspects of a currency for sure.
Bill, do you, when you're trading gold, do you change the denominator. Like gold priced in dollars recently broke out. In other words, US dollar finally made new all-time lows relative to gold. Saw the same thing in Swissy. But gold has already been making new all-time highs relative to every other currency in the world, particularly the Japanese yen. To be fair, most things have been making new highs priced in Japanese yen, but that's nor here nor there. When you're buying gold, do you think about it owning it in euro, owning it in yen, owning it in British pounds versus just trading it in dollars?
Absolutely. And that's, I don't want to overcomplicate it in what we do in the CTA, which is the commodity trading advisor. It's the fund, but that's why we have access to the euro and the yen. So not overcomplicating it in a bunch of currencies, but I mean, I've seen you for the last couple of years continue to put charts up with gold priced in yen. I mean, and definitely something that I've watched very closely over the last few years as the yen has just been demolished. And if gold's going to rally and have this massive ascent against the yen, heck, if the yen rallies a bit, you're going to see this unwind. So that was really where we started with this yen thesis earlier this year, and played the yen from the long side as a hedge to gold.
Yeah, I like lines that go up, Bill. You know, from the lower left to the upper right. And for a long time there, gold price in dollars just wasn't that, right? And but price in other currencies, it certainly was for a long, long time. What about, because you're like us, right? You got 1 foot in equities land, 1 foot in intermarket land, right? And I appreciate that. Not everyone's like that. So how do you think about the strength in energy stocks despite the weakness in crude oil?
Yeah, I mean, that's been a big divergence this year.
Throw it up, Spencer.
We've been holding a long position in our wealth portfolios, outweighing the S&P in energy. So we're about 11% right now in energy names. And it's not just traditional energy names. Where earlier this year, Marathon Petroleum was a very large holding of ours, and we kind of tapered that back a little bit as refiners have seen and struggled. But there's a lot of really interesting things going on in the energy space that's not just tethered to the price of crude oil.
Bill, why do you say that Marathon's not a traditional energy stock?
No, it is. It is.
Oh,
no, I said unlike Marathon, the more traditional energy name. Yeah, because that's really it needs good refining margins. It needs strong energy prices. Needs strong gasoline prices. It's for a name like that to really perform needs demand around the world. I mean, there's been obviously global fears, so refiners in general may have gotten ahead of themselves earlier this year. But we still see, Marathon is the largest U.S. refiner, and we still like the name quite a bit, and I think it comes back pretty nicely. But there's a lot of really great things working within energy. I mean, look at names like Kinder Morgan, the transportation of natural gas, the midstream names. Look at Exxon has been outperforming. It's up. So it was up as much as 20% when crude was flat on the year. It's come back a little bit. There's a lot of really great things going on. If you look at the Trump presidency and the administration coming in, what is that going to do for oil services? If we're going to pump more oil, you're going to need some technology to increase. The energy space in general has been underinvested for many, many years, and so I think that really leaves a door open for a lot of names like a Schlumberger and SLB. So there's interesting things to look at with the energy space that's not so tethered to crude oil. That's why we have that divergence, I believe.
Bill, when you zoom out and you look at a chart of gold going back decades and you overlay the price of copper, they don't separate too much. They dance together, right? And with gold making new all-time highs, copper still below those former highs from a decade plus ago. How do you think about that relationship? Is it just the precious metal rocks? Is it rocks in general?
Well, I mean, you look at China. I mean, I think that's really a big. You can't start that conversation without talking about China.
You really believe that?
I definitely believe so. I mean, and you look back at earlier this year, what got copper really going was the raw material going to the smelters, and really not having the raw material. China smelters, they huddled up and said, we're going to stop producing the actual high grade copper, and they took it off the market. That's why copper really rallied May and June. That's really oversimplifying what happened there, but China consumes more than 50% of the world's copper. So if that economy can't get anything going and continues to dissipate, I mean, whether you believe the numbers or not that's coming out of there, I mean, the growth, it's not what it was. So it's I think that's definitely a big headwind. And then you layer in some of the question marks that with the that's hit it more recently, like the tariffs and things like that come from the new administration. It's been a big headwind for copper. But if you back it out, there's a lot of names. I mean, or a lot of commodities that can perform just more idiosyncratically. Like we really like aluminum right now. That I think it can outperform copper potentially over the coming year.
When you look at China and emerging markets in general and overlay copper, the MSCI emerging markets EEM overlaid with copper, they move together. How do you think about the changes in the composition and the weightings of these emerging market economies? Like this isn't your father's emerging market ETF, right? Like there's a lot more tech. When I was coming up, 20 years ago, China and emerging markets were an extension of the commodity story.
Yeah.
But we know that that's no longer the case. However, they still trade together. So is that just like an asset allocation correlation sort of behavior situation? Or, despite the heavy tech weighting and the changes in composition, they still should move with commodities? Like, how do you think about that?
No, you said it. I mean, you take a look at EEM. It's a name that we did add into portfolios. We didn't really want the idiosyncratic risk of owning a Baba, owning a Tencent. We did want Taiwan semiconductor exposure. It hasn't done terrific, but over the last month and a half, on the heels of that China run up. But you look at the top 10 names in there; it's all China tech, and outside Taiwan semiconductor, which is the largest name in that. About 9% or so. I mean, it's definitely evolved. And I think we take a step back and you look at an emerging market index like that. If China has a pro-growth policy, something like that could do really well. But if you go back the last couple of years without a pro-growth policy, they're going to drive down these indices. So if you want something more commodity focused, so take a look at something like ILF. It's a South America
sure.
ETF. That's down, I think, 15% year to date. I'm kicking that one around. Obviously there's different idiosyncratic headwinds within there, but that's makes up, there's some bank exposure, but a lot of materials and energy exposure with an index like that. I think something like that is better suited than trying to look at an EEM.
I love what you're saying there. You and I might be the only people that look at the ILF. I don't think I've ever heard anyone outside of our team be like, that ILF, that Latin America ETF, right? The Latin America 40 index. The kids aren't talking about this sort of thing, Bill.
It's not sexy. It's not sexy.
It's not sexy. It's not it's not a dog coin. Right? It's a basket of Latin American stocks. Like that's just not sexy enough. But I have a funny feeling that when commodities are back in favor, that ILF, they're going to start launching like triple leveraged ILF funds, and right, like
when you see the quadruple, that's when you got to take your profits in the ILF. It's run up enough, and they're gonna put that thing down to sleep.
Dude, I was hanging out with the Rex Shares guys last night, actually, and last week. I'm getting a lot of them these days. Man, they have the 2X Micro Strategies ETF with $2 billion in assets under management. And it makes me sick, but I can't be mad at them.
But I do wonder what the turnover is there, right? Because
who cares?
People are trading it, right?
Yeah, so what?
I mean, do you hold that thing? I mean, you have to be out of those
assets,
same day, right? Sometimes
you're still getting a piece of the assets, whether it's being traded or not, Spencer.
No, I know, but there's a difference between $2 billion that's sticky, it's going to stay there, and $2 billion that's not. I feel like I mean,
line keeps going up, bro. What do you think about that, Bill?
I don't know. I feel like
MicroStrategies. I mean, it's just defied gravity. I mean, recently the thing keeps on going. I wonder. I was actually talking to somebody on my team last night. If Bitcoin pulls back 10%, what does that do? I mean, they're going to see. You've leveraged exposure like that. That thing could come in pretty sharply. I mean, it could be down 30-40% in a day very easily. Maybe it's a buying opportunity at that point, but it's something that's defying gravity right now for sure.
As someone like yourself, who's got both, you're in the equities market, you're in the commodities market. How do you think about Bitcoin and cryptocurrencies? Do you think about them as currencies? Do you think about them as commodities? Do you think about them as more tech stocks? How do you?
Yeah. It's definitely a risk on asset. When it's going higher. I mean, you're looking at the broad market saying risk on. Obviously, we've seen it perform with geopolitical tensions and for reasons in the past few years. We've seen it perform, with more favorable policy being adapted, whether it be ETFs or other countries building their balance sheets around it. So I think there's a tailwind, obviously, that everybody's seeing right now as it's becoming, more accepted. We've treated it different ways. I mean, the commodity funds we went into, so I think it was September, we started building the position out there, and end of, so the November options, which futures have had for years now, or at least a couple of years now, build the 75,000 calls that expired at the end of November. We're out of them now. But that was our election position really in the commodity funds. So we rode that up, treating it as a trade, getting some good leverage in that into our fund. And when we broke out above 90,000, we were really taking all that off at 90,000 in that range there. We do believe it can go higher. Now on the wealth side, first time this year, middle of the year in July, we introduced IBIT to wealth portfolios. We started off with about 0.5% of IBIT. And I think it was maybe 30, 40 basis points of Marathon holdings, which really that was not. I looked at how can I bring high beta to Bitcoin, and I thought Marathon Holdings had the most catch up to do. We have since exited Marathon with really right around unchanged after it surged in recent weeks, but we still have that IBIT, and it's about 80 basis points of portfolios. I see us increasing that in wealth portfolios if it pulls back a little bit, settles in, above those previous highs, and build in something that's going to be there, maybe 1.5%. And so I think on the wealth side, for viewers out there with your own portfolios, I mean, yeah, some of you might be crypto and trading it and know it inside and out, and it's a big, larger portion of your portfolios. But for those of you that don't, and hey, should I get some Bitcoin on? And I don't think it hurts to have 1%, maybe even a little bit more if you manage it a little closely in your portfolio of something like IBIT. I mean, I would think that this thing keeps on going over the years to come with the favorable White House.
So it sounds to me like, and I appreciate this because I'm the same way. You treat cryptocurrencies like a commodity when you need to.
Yeah.
You treat cryptocurrencies as a currency potentially when you need to, and you could treat cryptocurrencies like a stock when you need to. So I feel like it's very adaptable depending on what you're trying to accomplish. I know for us, we have a sector rotation model with all 11 US sectors and IBIT.
Yeah.
Right. As a, kind of like a kicker. And then what we'll do is we'll adjust that volatility. So we'll own the best three, essentially the best three sectors. And if Bitcoin is one, IBIT is one of those top three, then we own the top four. And that's how we'll adjust to that additional volatility. I really like that a lot.
Yeah, that sounds really good. I mean, it's important to have that exposure, especially if you're rotating and thematically you being able to utilize it within a model. You take on more risk when it's ready and ripe.
JC, it's not fair. Your sector rotation model is outperforming because it has Bitcoin in it. Yeah. You suck if yours doesn't. What do you want from me? Tough shit, right? That's how I think about it.
It's not. You said it earlier here. It's not your grandpa's old market right now. I mean, it's not going to be. The market is continuing to adapt, and it's going to be that way. And if you either sink or swim, and you got to stay on top of it.
Grandpa didn't have Peanut the Squirrel at $1.8 billion in market cap.
How quickly those things can happen. I mean, it's wild. How these meme coins can really move. It's something else. I mean, you can get into rabbit hole on Twitter following some of these meme coins, and it's I got to stop myself sometimes. Kind of, you think it's research when you start, but you start getting into a rabbit hole for sure.
If the haters were just having more fun, they would be doing better probably. Yeah. I've noticed that the biggest haters are just not having any fun. Right? It's helpful. It's helpful to have some fun. How are you thinking about the market in general right now? Here we are, just before Thanksgiving. We are in the, just entering the best period of the entire year. And, we've had, 20+% returns across the indexes this year and last year. You had multiple bear markets over the last half decade. So to think another one's coming overnight is questionable. Like, where do you think we are in the cycle? Not just in the equities market, but from an intermarket perspective.
Yeah, I mean, new highs typically lead to new highs, and First, I think I may have gotten that from you actually.
I mean, it's true. We know, we have the data.
Yeah. I mean, the first year of his presidential cycle typically good too, and I don't think President Trump is going to want to knock that off. But what you said just now, seasonally, we're moving into a good time of year. I like the fact that we sold off pretty sharply on Friday, and we even had a little bit of panic early yesterday. Kind of sucked out some of that enthusiasm we had post election. If we go back to October 30th, there was a gap down on the 31st. So we kind of blew through the 30th gap post-election and never really traded there. So yesterday on the open, we used that as a little bit of a ballast and a support. Yields, I don't know. I mean, I'm not going to go on a limb and say yields have topped, but the 10 years trying to top at 4.5%, and you had the little bit of geopolitical escalation early yesterday, kind of pulled yields down a little bit more, gave a bit of a tailwind. Then you get earnings from a name like Walmart when the market needed it. You get a pre-earnings RAM from an Nvidia, so that's in the ballast now. What do they do? But overall, I mean, I think the market's setting up pretty well. If you flush out a little bit of enthusiasm, get people on their heels a bit, and I wouldn't be surprised to see this thing keep running. I have a target 6,200 or so in the S&P before the end of the year at least.
Do you think that we're going to get rotation back into technology? And do you think that in order for the S&P to hit your targets, that technology needs to become a leader once again? Stop underperforming so much?
I think it does. I mean, now I'm bullish on technology. We've been rotating more into the Mag 7 over the past few weeks. A lot of that, we leaned into industrials when really no one wanted them in as much. But I think you take a step back. You're kind of painting the indices with the sectors with the broad brush. I mean, our holding wise, Nvidia is our largest holding, and
got a nice stick yesterday.
Yeah. I mean, it definitely helped. And one thing about that chart, going back to those June highs, July highs. Yeah. I mean, it's holding out above there really nicely. I mean, that's today's earnings reports to be big, obviously. But we had names in industrials like Westinghouse Airbrake, very boring. WAB, United Rentals, they were WAB was a number 5 holding. URI was a number 8 holding. AbbVie before it fell off. It was hanging around there, number 7 for us. I mean, so you have some stuff in there that's really driving performance in a portfolio we're very heavy tech, but we had more of an evened out portfolio where now we've trimmed some of these industrial names and we're taking that cash. We're adding to Microsoft. We're adding to Amazon, which is broken out. I mean, we see a lot of underperformance in Microsoft that we're taking, a bet on here that we think that subsides and it starts to outperform the NASDAQ to the end of the year. So I think if you look back, last couple of years as well, we've had strong performance from tech in the past, through this fourth quarter. I think that does continue because I think everybody's really starting to get on one side. Everybody's starting to expect that, okay, Apple's sideways, Microsoft sideways all year. And so you get this sort of unloved nature around it that brings under positioning. And once they start to move, I think that positioning can start to pick up. So we've been rotating away from some of the names that have really helped us in the last couple of months to lean back into these Mag 7s. And I think that's what could take us into the end of the year.
Yeah. And, on the Mag 7, you look at Amazon, Tesla, and, these have been massive underperformers for quite some time until recently. And now consumer discretionary pushing up against the highest levels of the year. On a relative basis, really being driven by that Amazon and the Tesla, Home Depot to a certain extent. But I was in the camp that if this bull market has legs, and I did, that consumer discretionary can't keep underperforming. They had to come in there and buy them, and sure enough, they stepped up and they bought them. Yeah. Do you think that this outperformance from consumer discretionary can continue? Because it's pretty important for this bull market, right?
Yeah, I mean, these ETF flows are a big driver. So you look at a lot of managers; they're not going to want to just say I'm chasing Tesla here or I'm chasing Amazon, and they start buying the ETF, and that flows trickle down to everything. Amazon's a top 3 position of ours. Tesla's in the top 10. So we, individual name wise, we think those are the biggest drivers, of course. But I do think that consumer discretionary is something that's going to have to pick up. We've had good earnings overall. And I think Walmart is a good harbinger of that. What we saw yesterday. Amazon's obviously multiple business streams, but their traditional consumer model has done really well. So I mean, I think this thing continues. I mean, I think overall it could be a very broad move. It just depends where, across the markets into the end of the year, what's going to be the major drivers. I think we're already starting to see that with Tesla. And I mean, I think that I really like this breakout in Amazon. I mean, this is something you go back to the middle of the year. It was a nice round number at 200. Couldn't really get above there. Now we got out above it. Can we hold it? Can we get some nice follow through in the coming month or two? I think that could be a name here that people, they can't ignore.
Yeah, I was talking to Jeff Mackey, and Jeff was like, Amazon, Walmart. You want to know how the consumer's doing? Just follow those stocks. All that government data is a bunch of bullshit.
Yeah.
Jeff also said that Walmart isn't a trade down retailer, not anymore, if ever. The company does $1.5 billion U.S. retail every single day. Wow, 1.5 billion.
That was always the thing with Walmart, is if you were a perma bear, it was great. It was good for you if Walmart is doing well, and good for you if the Walmart was doing poorly. Because if Walmart's doing well, it means that people are trading down, and that's bearish, right? And if they're doing poorly, that's bad for the economy, so that's bearish too. So it's really bearish on the other side, but you're saying not anymore.
So I trust Jeff Mackey more so than perma bears, right?
Yeah.
Imagine that. And he specifically says Walmart is America, which is a sad thing if that is the case. But I get where if you've been to a Walmart, if that's America, it's people
some
of
Walmarts
Walmart
are nice.
is why
they've introduced,
was invented for people of Walmart.com.
I mean, they introduced the grocery in a time of it's been a big driver for their business, but they talked about in their news report yesterday, and that's really one of the things is they raising the guidance because people are spending outside of grocery, and so they're competing with Amazon. I mean, I love going on Amazon, and something you forgot over the weekend when you're out. Heck, you could be delivered by 10 o'clock, by noon that day. So it's great to have that. But Walmart's getting into that business, and that's going to be a good competition for Amazon.
I saw a stat from Walmart's earnings. What was it? I think it was they said 30% of their online orders involved people paying extra fees to get them delivered sooner.
There you go.
Like 1/3 of their online orders, people were paying more for faster delivery. I'm like, what do you need that soon?
It's not a recession indicator. Like people have more money to spend to get it sooner.
Yeah. All right. Whatever. I don't know. Bill, Baruch, thank you for coming on, man. Always appreciate it. Love, guys. If you don't follow him on Twitter, link is in the chat. Check him out, or description. Sorry, check him out. And Bill, if we don't talk to you, have a great holiday season. I'm sure the holidays in Chicago are lovely, and we'll talk to you again in the new year.
Yeah, always a pleasure joining you guys. Yeah, great seeing you. Thanks a lot for having me.
All right, we got to talk about the target here real fast, JC.
Spencer
Can you bring the
loves
target chart
going
up?
to busy cities during the holidays. You are just a sick man.
I've been to Chicago actually during the holidays, and it was lovely.
Probably not cold at all.
Yeah, no, it's just a little windy, just a little bit. Can we get the target chart up, please? Do we have this here? Just a disaster here. Every number missed. They missed on the top. They missed on the bottom. The comp sales, traffic, it was all, the guidance was weak. It was all weak. Everything was bad across the board for guidance for Target this morning. It is down 17.5%, heading into the open in 5 minutes. So it's going to take retail with it this morning. As good as Walmart was, that's how not good Target is. So this has been we talked about this yesterday, or Steve and I did maybe the other day. Target's been they've had some interesting adventures. Like typically, we shit on analysts a lot on this show, but typically these companies generally know how they're gonna do, right? Their guidance is usually pretty in line, so the estimates are usually pretty in line because the companies usually understand their business pretty well. Target has had some wild volatility in their earnings and in their inventories really since COVID. If you just go look at just how their numbers have compared to the estimate, just wild spreads there. So they've had some huge beats, they've had some huge misses, sort of unpredictable, this company right now. So anyway, massive miss this morning for Target. It's going to lead the way for retail down today, all day, I suspect.
I hope it goes to zero. I don't know if you heard, but Walmart is America, according to Jeff Mackey.
With the exception, it's gonna lead retail down with the exception of Williams Sonoma, which is up 24% this morning on their earnings report.
Wow.
And what did they say? I'm glad you asked. They said we're still gonna our revenue is still falling, but it's not gonna fall as much as we thought it was. So that's less bad news. That's what Caleb Francis said the other day, right, on our show. He's talking about the economy, but the same applies to stocks. Less bad news is good, right?
So the equally weighted retail index is down about 70 basis points this morning, and the market cap weighted retail index is flat this morning. So retail not getting hit that much. Is Target really a great indicator for retail? According to my wife, Target sucks. And I think the market doesn't seem to care either. How do we feel about that?
What about Target? Yeah,
I mean,
Target's
you're not seeing much of a reaction in retail at all.
I mean, Target's not the bell. It's $60 billion company. It's not going to move the whole market.
It is now.
Oh yeah, it wasn't yesterday. That's true.
It was much higher before. So it's
yeah.
only
It was not
billion.
60 billion yesterday. But no, it's not going to move. It's not going to move the market.
No,
of course. There's only a handful of stocks that will. One of them is Nvidia. They report tonight. I think Kenny's going to go live at the close to talk about it. Because every Nvidia earnings report is the most important earnings report of our life.
Yeah.
I did see. I think what was it? 8% expected move tonight. Nvidia. That's what the options market's pricing in. So, we'll see. But I think 420 is when they usually report after the close. So.
Around 420. You think that's a coincidence, or you think
Yeah,
that's
no, it's a coincidence. The reports come out in 5-minute bands: 4 o'clock, 4:05, 4:10, 4:15, 4:20. They usually stop at 4:30.
I think if I was the CEO of a publicly traded company that was this important, I would just do it on 420 also, just for shits and giggles.
Okay. Yeah. Or do it at like 3:59.
Or do it on a Saturday like Warren Buffett, because he's
That's
the man.
that's true.
Like
Do it on a
you know,
Saturday.
that's pretty gangster. Also, like back in the day when I was younger, Google would always report on Thursday night right before options expiration. This is before 0 DTE. And I was always convinced that they always did that just to screw with traders. And I always thought that was pretty funny. That was back in the day.
Yeah, I don't think they cared.
Let's bring on Mary. I want to hear her thoughts.
Yeah, sure. Mary's here. It's time for Mornings with Mary. With Mary. If I can find my video. Oh crap. Mary, there it is.
Hey Mary, what's up?
Good morning, gentlemen. It looks like you had a great time last night in the city.
You know, it was good. A lot of people, that were like, at the conference, they're like, I'm exhausted, I'm so tired, blah blah blah. I was like, yeah, I feel good.
Well, that's
You're not
like,
on the Proman program
no, that's the go-to conference small talk is how tired you are. You know what I mean?
because everyone's trading and making money in the market.
I don't think they were trading. I think these
No.
are like fintech people, like, but everybody was
should be
like, I'm
trading.
so tired of schmoozing. I was like, really?
Oh,
All
such
right.
a hard life.
I know. There were a lot of people complaining about that. You notice that, Spencer?
I had a couple, but that's like go-to small talk is a long day. The city's exhausting, man. The city's tiring.
Yeah,
gotta agree
feel
with
like it
Spencer, though.
energizes me.
You won't hear me say it often, but I have to agree with Spencer. I gotta think New York City at Christmas is
Damn
pretty
it, Mary, you're
magical.
not helping.
It
You've
was-
been in New York City in December?
Yes,
that did
it was
not help
fun.
my cause.
It was a year ago. Remember, I flew in for that CMT event, and we went to the stock exchange, and it was all lit up with the red and the green and
Yeah,
the big Christmas tree. That was amazing.
Damn it, you're a tourist. That did not help.
I know
my
I'm a
cause.
tourist, so I totally get.
downtown
Well,
is
people
one
that
thing.
live there, it's probably
Downtown's
not,
not the end of the world, but you got to stay away from Midtown.
I believe that.
Downtown's not horrible. So like you were down on Wall Street, New York Stock Exchange, like there's nobody down there. It's fine. But once you
It was
start
great.
getting towards the 30s and 40s, forget about it.
You want to hear
And,
something?
yeah, Chicago's the same way. I
You
know
want to hear
you guys
something
were mentioning
crazy?
that earlier.
I'm going into the city on Thanksgiving like a psychopath. I don't have a choice in the matter. I have to
Isn't
go.
there a parade? There's the parade, right?
Yeah, that's not why I'm going. But yeah, that's gonna suck. But
I
neither
That
here
is
don't
nor
think
gonna
it's
there.
suck.
gonna suck, Spencer. I'll take the other side of that. I think Thanksgiving, New York City, I think it's gonna be nice and quiet and peaceful. Everyone's
Oh,
already
I've
gone.
never been to New York on Thanksgiving before, so we'll find out. I'll report
Yeah,
back.
I
It's a
think
parade.
you'll be fine actually.
Okay, cool.
Yeah.
Anyway,
We'll see. Mary, what's on your mind?
It's the day after Thanksgiving. You want to
Yeah.
well. Yeah, so I brought a couple of charts along and kind of more of the same, you guys. So the one that I have my eye on right now is DocuSign. This one was we discussed in the hot corner recently. I think this has even been maybe a breakout multiplier trade, but it's that same pattern that I keep buying over and over and over again. Nice, great base. We've started to move out of that area of resistance around 69, and I anchored a VWAP from all-time highs, and we're trading right about there. So I missed this one, but I'm looking for an opportunity to get in. So I'm going to be looking for either retracement back to that area where it broke out, or I'm going to see if it consolidates here, maybe puts in a little flag or something here in the next couple of weeks, and then starts moving up above that VWAP from the highs, because these bases, they have paid me so well over the last year or so, and we just keep seeing more and more and more of them. With that said, my mind has kind of started to feel like, when everyone starts zigging with you, it's time to zag. So, I've heard you guys talking a lot lately about technology, XLK, and the energy space. And so, just kind of out of curiosity here in the last couple of days, I ran one of those RRG rotation graphs and was looking at
Yeah.
all the
Okay,
sectors.
Mary.
Watch out
Okay.
now.
Excuse
Who's
me.
been in the CMT books? Yeah. So if you're, get it rotating, you've got XLE coming out of lagging, moving into improving here in the last couple of weeks. So I was like, okay, let's go into rangefinder. Let's take a look at some of our energy trades in rangefinder, see what's going on there, if we've got any really great ideas that are breaking out, or at least looking interesting. So the one that I brought along today is Cameco CCJ. And this, my friends, is a monthly chart, which
Yeah.
is not a chart that I typically look at. I'm usually looking at days and weeks. But if you zoom way out on this one, I mean, hello, it's another one of those great bases by the smile, right? So I measured that move from 2000 through 2007. That's about 3,200%. So it makes sense that it has been sideways here for the last number of years, but we're right back to that area of interest of those, 2008 highs. So this one has my attention just because, I feel like we could start to see the next leg higher on this one. We've seen so many of these bases. We saw this in gold. And so if we are kind of in the middle to later stages of this cycle, and if technology is going to start to or continue to underperform, then it's time to look in other places, and energy makes very logical sense to me. So this one's on my radar. I have not in this one yet, but it's a lot with some other energy names is one that I'm watching. So that's what I've got for you today. What do you think, JC? Tell me where I'm wrong.
I think you're wrong if we're below the '08 highs.
Oh, for sure.
That's where I think you're wrong. Or the '07 highs, I should say.
207.
I think you're spot on with this base. This will be a new all-time monthly closing high. If we were to close here next week, or the following week. This is just a great base. I mean, there's no question. If we're above those prior cycles highs, I mean, sky's the limit. Shout out Biggie Smalls.
I think so. I learned from someone, not to name any names, that bigger the base, the higher than space, right?
Oh my God, I was at lunch with a venture capitalist on Monday, and he's like, in the '90s, I took this course, David Shaw. I'm like, you mean Alan Shaw? He's like, yeah. I'm like, you took Alan Shaw's technical analysis course in the '90s? He's like, yeah. I'm like, wow. Because everybody's always like, oh, I took Ralph's course. Rarely do I get, I took Alan's course.
Wow.
And then he's like, there was this other lady there too. I'm like, who, Louise Yamada? He's like, yes. He was like very impressed that I knew all these people. He was sad to hear that Alan Shaw passed last year, but I thought that was totally random. I'm here talking to a venture capitalist. about technical analysis, and he's talking about like charts from the 1987 crash and the
Oh my
outperformance
goodness.
of Coca-Cola in the 1930s. I'm like, who is this guy?
Wow.
Jeez.
Yep.
That was
So yeah,
fantastic.
like I said, I'm still very all in. I'm managing the trades that I put on before the election. I've started taking profits. And I'm heavy in that speculative tech, very heavy in cryptocurrency still, and Bitcoin and the miners and all those things. And like I said, I just kind of feel like when I start to notice that my portfolio is very heavy in one way, it's time to really kind of start to rethink that and look where I might be missing an area of opportunity or an area that might be improving that will be showing up performance soon. And so, yeah, the fact that you guys have been talking about XLK versus XLE, I think you had a chart earlier in the show. You guys were talking about that a little bit. It's one of those areas that I'm going to kind of be watching just to see kind of where we go from here. But I think, Nvidia, we've got Nvidia tonight. So that could be a big change in the technology space. And maybe technology just took a breather and then we continue on. Who knows?
So is it Nvidia or is it Nvidia?
It's N. It's N. It's like
Nvidia.
IN. It's Nvidia.
Nvidia.
I've been corrected on this a million times.
A
I'm
lot
sure
of
I'm
people
saying
call
it
it
very wrong.
Nvidia.
Yeah.
What?
A lot of people call it Nvidia.
And
Nvidia.
they're wrong.
And
Wow, are you calling out Mary saying she's wrong?
I'm just saying.
okay with it.
I've been
Rude,
corrected.
Spencer.
All right. Should we just
Mary's
do
so
recess and
nice,
get
you're
get
calling
out of
her
here?
out.
I'm just gonna do recess.
Okay.
All right, do it.
All right.
I just want to give a shout out to, sushi culture in New York City. Underrated. I think it just gets lost, because New York has so many amazing things and cuisines that I think like the high echelon sushi in New York City just gets lost because there's, old school Italian and the steakhouses and Korean and all these other things. Sushi game is on point. Sushi game is on point.
It is the greatest food city. So
we don't get much good sushi here in Michigan.
No, not where I live either.
No.
Too much landlocked.
Yeah,
but we get fresh fish. We get fresh fish.
Yeah.
Freshwater fish.
Not a lot of Japanese people living in Holland, Michigan.
Not in Holland. You'll probably find more of them over in Ann Arbor and Detroit, but
yeah, that's probably
not here on the west side.
That's probably true.
So speaking of Ann Arbor, this will be my recess. Speaking of Ann Arbor, headed to the big house on Saturday with my boy at Options Sean. Is he in the chat? Is he stalking?
Oh yeah. Is this the weekend you and Sean are going?
This is the weekend. Yeah. So Sean and his family are coming into Ann Arbor to visit some friends. We were talking about this at the Chicago Portfolio Accelerator, and I said, "Oh my goodness, if you're coming into Ann Arbor, if there's a game, let's catch a game." And so, oh yeah, there's a game. It's Northwestern. I mean, woo. Maybe it'll be one we can win. We'll see.
Doesn't matter.
But so he's bringing his son. I'm taking my middle son. They're about the same age, and so both boys have never been to the big house, so it's going to be a really fun experience.
Oh, it's going to be a good day.
It's gonna be dry. That's all that matters at this point in the season. It's going to be dry. It'll be cold,
because it's late. It's already
It's
November.
late.
Yeah,
it's cold. We're actually supposed to get snow tonight.
I heard that.
Yeah, that's what I've got.
Sean's
Hey,
here.
Sean. Good morning. See you Saturday, buddy.
My recess was just we got to hop a few minutes early because JC has to get ready for his call tonight. So all you people that are in AAC Premium, you've gotten emails about this. If you are not in AAC Premium, I will drop the link in the chat right now to join and get to the conference call. 8 p.m. Eastern time. Right there. Link in chat. So we'll see you there, I guess.
Yeah, can't wait.
I plan my days around this call. Twice a month.
I do too.
Well, you kind of have to, but I don't miss them because if I don't watch them live, I typically don't watch them.
My favorite thing we do, whole team gets together, organizes all our thoughts. We come up with our approach. We got a team meeting today. Fantastic. I love it.
Looking forward to it. Do you have a favorite already? Have you started putting the deck together? Do you have a favorite
chart?
Yeah.
I've been thinking about this rotation around technology. I think this is what's on my mind. I mean, I can't stop thinking about it.
Mine too.
Yep.
All right. Look
All
forward
right.
to it.
We'll see you guys there. Smash the like. Thanks, Bill Baruch, for hanging out. Thanks, chat, for hanging out. Go make some money, and we'll catch you guys tomorrow.
Adios.
Bye, guys.
I can't take no loss. I don't even know what it costs.